Hey guys, what is going on? Hunter here, and today I want to give you guys a little bit of update on where I'm at with Robinhood, what's going on there, as well as some interesting dividend stocks and other ETFs, and a little bit more speculative, possibly higher risk, but some other growth potential stocks I think are an interesting buy right now. So let's get right into it. First off, I'm on the Robinhood desktop app, and which I do enjoy pretty thoroughly. It's a really nice app. It's pretty well made, pretty polished, and it's been serving me well. So right now I only have $145 in. I took a lot of my money out over the past months because I was on M1 Finance for a bit, and as well as just wanted some cash available to myself. Um, so we could see right now most of my holdings are in cryptocurrency. I am waiting on 2 shares of SPHD, which I'll get into, is a stock that I really enjoy right now, um, to be purchased in the next trading window tomorrow. But so that's where I'm at with my portfolio. I plan to keep adding money to it pretty consistently and try to grow it as sort of a high dividend portfolio and generate some passive income, as well as try to grow the dividends over time, the dividend growth method. So let's get into some of the stocks and other picks that I think are interesting to take a look at right now. First off, Neo. I only have 2 shares right now at $6, but I plan on buying more potentially because I was just kind of testing the water. And if you don't know, Neo is a electric car manufacturer in China, and they kind of have the first mover advantage, similar to Tesla, and they are serving a more premium market at the moment, so that's why I compare them to Tesla. And right now they're only at 295 a share, which makes them a pretty interesting buy because their IPO was at, I believe, 1160. Yeah, exactly, 1160, and they had some spikes along the way at over $10. But now, over the past 3 months or so, they've started to bottom out, and they're about 295. And the reason that is because of their funding and balance issues, as well as the possible idea of them becoming a joint venture with the Chinese government. So that's causing a lot more uncertainty than one would typically like. However, at 295 a share, I think Neo could actually be an interesting buy. Uh, so, if you're willing to take on this short-term risk until they clear up their financial issues and hold it through possibly, 2021, 2022, it could be a pretty good buy, especially at only 295 a share. So that's something interesting to consider. Definitely not going to help you in terms of stabilizing your portfolio right now with how unstable the market is and with, they're not coming to the US anytime soon with the trade deal and all that. But it is definitely an interesting buy if you're interested in getting into tech and electric cars in your portfolio and potentially having some large growth over the next few years if you're willing to take on the short-term risk. So Neo, keep that one in mind. Next one on the list here that I want to talk about. Let's get through the more speculative ones first. Um, LK, which is Luckin Coffee. So again, back to China. This is rumored to be, or not really rumored, but kind of proposed and analyzed to be possibly the Starbucks of China. So they had their IPO only a couple weeks ago at May 16th at $25, and as a lot of IPO does, it sunk a bit. But if we go to the past week, they're up over 30% at 34.92, and they are seeing some serious traction and a lot of other interested opportunities happening, possibly with franchising and other things. So they're seeing some very steady growth, and I believe this growth could be even more exponential over the next few years. And this could be like getting into Starbucks in the first 3 weeks, which would have been fantastic. So once again, a riskier stock that I would say purchase at your own risk. But if you're willing to take on that risk, this could be one of the possibly highest growth potential stocks as far as growth stocks go. Let me see. Oh yeah, we got to mention. I don't believe it's on here. But we got to talk about Tesla. So let's pull up Tesla real quick. So I'm sure, unless you've been living under a rock, you know what Tesla is. Um, but if you've been paying attention to the news surrounding Tesla, as well as obviously they've been affected by the market as well. But Elon came out and said that basically, if they don't get, I believe it's a billion point two, maybe a little more, by the end of the year, that they're essentially going to be out of money. Which on the surface is kind of scary, but when you really dive into the company, and first off, Elon himself is worth about 30 billion, and SpaceX has been doing great for him. So while no one likes to pump money into a dying company, I don't think Tesla's a dying company because they have the first mover advantage when it comes to luxury electric vehicles in the U.S. And they have a billionaire CEO backing them. And I know there's a lot of other tech companies that would probably buy Tesla out if push came to shove, worst case scenario, if they couldn't get the money they needed by the end of the year. So right now, Tesla is trading at $179 a share, which is pretty much all-time lows. The only time lower was February 12th, 2016, in the last 5 years. Um, you know, in December of last year, they peaked at 365 a share, and the fair value is at 240 a share for Tesla right now. And some people believe that in the next few years, if they get the financing they need, that it could get to like 500 a share. Which, while I don't know if that's likely, that's certainly not impossible. However, I do think it is almost certain that Tesla is worth more than it is right now per share in the long run. So, trading at almost all-time lows, a very interesting time to get into Tesla if you're going to. If you're going to get into Tesla, now could be the best time to do so. Um, it's been going down pretty steadily for the past 3 months, almost the past year, with all the financing issues and the market and everything that's been going on. And I do believe Tesla might go down a little bit more this week. However, as in the upcoming months and years, I do think Tesla is going to start trading a lot higher than it is right now. So if you're going to get into Tesla, probably the best time to do so. If not, you can wait a week or two, see if it gets a little lower. But other than that, very interesting stock at the moment. So let's go into some of the safer options. If you're not too interested in those, um, there's some great dividend stocks. And the great thing about dividends and dividend aristocrats is that they bring some nice steady cash flow when the market's uncertain and stock prices aren't guaranteed and aren't growing, possibly even declining. So first off, Coke, tried and true. They're a dividend aristocrat that's been upping their dividends for I believe like the past 50 years or so. And if we look at the past 5 years, they're up 22%. They're not a huge growth stock, especially at where they are right now. With I believe here, let's take market cap 213 billion. Obviously everyone knows that Coke is huge, but that 3.3% dividend is very attractive, and that's been going up consistently. This is actually one of the largest holdings in Warren Buffett's portfolio because of their dividend and how steadily it's been rising, and that really compounds nicely over the years. So if you're looking for something a little bit more stable with a little bit of passive income attached, Coke's a pretty nice option right now. Another one we got to take a look at, AT&T. While Trump has made attempts to boycott AT&T, actually, I believe just today he started saying that. It comes off of nothing financial or technical. It's off of his claims of fake news. So I'm not going to get into political, views right now. But I don't believe that Trump's assertions are going to negatively impact AT&T's stock price too much in the future. We can see on the day they're still up 1.5%. And I don't know if you're aware about AT&T's recent financial matters, but they acquired Time Warner for a multi-billion-dollar deal, and that put them in some pretty serious debt. However, they've actually claimed that they are going to have 75% of that debt paid off by the end of the year, which is outstanding. And if they continue to pay off their debt at that rate, they could be debt-free by the end of 2020, which would be pretty amazing. And obviously also their dividend yield is phenomenal at over 7% right now. I feel like it might be a little lower than that. That number might be inflated a touch. I'm not sure. but I know it's over 6.5%. So very solid dividend. And AT&T, they've really diversified their company. They're now in media, marketing, um, wireless, several different industries that have solid growth potential as well as decent stability. They're down a little bit in the past 5 years. I'm not too concerned about that, as their financials are going to increase and become a much cleaner balance sheet for the company over the next few years. So now could be a solid time to get into AT&T, especially if you're looking to build some passive income with that very nice dividend. Now, if those stocks are even a little too risky for you, then there's actually, let's do one more that I wanted to mention on my watch list here, which is Disney. Uh, Disney is a really great company in my opinion. They have not ceased to make smart acquisitions over the past several years, as well as keep a very clean balance sheet, accrue almost no debt, and their cash flow is solid. And Disney Plus is going to come out at the end of the year, which is going to have exclusives on Marvel and Star Wars and other franchises that are huge blockbusters. And I don't see Disney going anywhere anytime soon. And if they keep making acquisitions and bigger moves like they do, that's a really great stock. And they've also been increasing their dividend for about the past 9 years, I believe, and it's up to 1.5% ish, and that's also going to keep going up. So, they're a dividend aristocrat, and they're going to see a serious revenue boost from Disney Plus at the end of the year. Another very interesting stock to look at right now. I believe that's going to do it for the growth stocks and other speculatives that I had wanted to mention. Now, let's talk about ETFs for a minute, because first off, you don't know, an ETF is an exchange traded fund or a collection of companies. Most of them are upwards of 500 companies, and these are going to be a lot more stable because you have the growth and decline of 500 companies averaged into one stock for your purchasing. So that's going to be a lot more stable. Uh, One I just purchased 2 shares of today, SPHD, Power Shares S&P 500, High Dividend Low Volatility ETF. This is one of my favorite ETFs. First off, their dividend yield, I believe, is about 4.5%. It's not listed right now for some reason, but it's about 4.5%. And that has been a very steady dividend that has been paying out, and I believe it's actually been increasing. And they also pay out monthly, which is very nice for compounding your passive income. And they're actually at a 3-month low, I believe, if not longer. Yeah, the last time they were this low was once again the 2018 December dip. So now is a very good time to get in, because ETFs don't dip too frequently, and when they do, it's not for very much. So this might be your best time to get in, because I see this going up definitely in the near future. As you can see, it started to level out right around here, and in the last few days, it's actually started to go back up. So I believe as people move more towards ETFs and bonds during this time of economic uncertainty, SPHD is going to go up in price, and now would be a good time to get in before it does so. So that's a great one with a nice high dividend yield as well. The next one that I want to mention is Noble. Let's get into this one. This is Dividend Aristocrat ETF. So if you're interested in building a a dividend aristocrat portfolio, or dividend growth portfolio, however you want to put it, this is a great way to get some instant diversification, because there's 500 companies in this that are all have been increasing their dividends for the last 10 or more years. So a really great stock for stability as well as dividend growth. I believe their dividend is around 2.1%ish, so very respectable. And this might pay monthly. I'm not sure, but I'm pretty sure it pays monthly. If not, you can still see it has more growth than the average ETF, which is really nice. Up 43% in the past 5 years, which is pretty high for an ETF, especially if you compare it to something like the Dow Jones Industrial Average or just the regular S&P 500. This is a much higher growth rate and a much higher dividend. So that can bring some stability as well as more passive income. So really nice stock. And the last couple here I wanted to mention, DHS, which is Wisdom Tree US High Dividend Fund. They pay, I believe, 3.5% dividend and have seen pretty stable growth over the past 5 years. And they react to the market a little bit, as you can see here, especially with the dips that are apparent. And right now, however, once again, if we go to the month chart, we can see that, or even the week chart, excuse me, we can see that that decline has started to level out and they're coming back up. And, if we look at the past year, they're down right now in the last, well, if we go to last week real quick, they're down 2.5%, whereas the average company on the S&P 500 has been down about 5-6% in the past week or so. So it's much more stable actually, and you're getting better returns with the dividends that paid monthly. So very nice stock right there. The last one that I wanted to take a look at was, oh yes, PSCF, which is PowerShares S&P Small Cap Financials. So this is some small cap companies that has seen about a 37% increase in the past 5 years. And I believe their dividend, once again, not sure why Robinhood isn't showing these right now, but their dividend is around 4%, I believe. So, and it's paid monthly. So some serious nice compounding with a monthly dividend there. And interesting, only 25 people own shares of this company. Wow, this could be a really good one to get in. So, it's very stable growth and a nice dividend as well. And the last company that I had on here that I wanted to talk about, let's see, actually a couple more. Starbucks, Starbucks isn't going anywhere. They're not too heavily affected by a trade war or a recession. You can see in the past year, basically unwavering growth. It's very solid, up, 33%. I believe their fair trade value is in the mid 80s, so there's still a little bit more room for growth. But they're a dividend aristocrat with over a 2% dividend and growing. So that's a great stock to get in right now if you're looking to build a high dividend portfolio. Then the last one I want to mention is ExxonMobil, because ExxonMobil is actually down a little bit right now. Let's pull that up real quick. ExxonMobil is up today, but if we look at the past 3 months, they're down, reacting to the market, and they're actually reaching close to all-time lows. The only time lower, once again, December 2018. But beyond that, almost all-time low. So very interesting time to get in because I know they're revamping their business model and moving away from petroleum. Not as much as some other companies, because you might want to look at Shell and BP, which have actually made promises to reduce their emissions by the end of 2020, which I'm personally a big supporter of. But given ExxonMobil's cash flow, as well as their capital that they plan on moving into chemicals and volactics, and as well as biochemicals, which are going to be, and natural gas, which are all better than petroleum for sustainability. I believe there's some decent growth to be had here in the future at a very solid buying price right now. Not to mention the 4.7% dividend yield, which is incredibly respectable and will bring some nice cash flow to your portfolio. So that's all the stocks that I wanted to talk about. Another time, if you guys are interested, I could go through some of the other ones on my watch list. If you guys have any other stocks that you're currently watching or are in that you'd like to mention, feel free to do that in the comment section below. If you guys have any suggestions about video topics you'd like me to discuss or other stocks and funds that I might have missed, please leave that in the comments as well. I'm not going to get into much to my cryptocurrency and the theories there, but I know that crypto is definitely going to be higher than where it is right now as it gains increased traction and as well as gaining some more widespread usability. So that's why I'm in that, and I believe that I'm going to increase my position in all these coins I have up here right now, these altcoins as well as Bitcoin, and I'll definitely be adding more money to my portfolio as I'm getting back into Robinhood and trying to grow my dividends as well. So thank you everyone for watching. If you have any comments, please leave those below. If you enjoyed this video, please give it a thumbs up. If you did not, you know what to do. If you want to be notified when I make future videos, please hit that bell icon and make sure to subscribe for my upcoming content because I will be doing portfolio updates as well as other informational videos and some of my other stocks that I've been taking a look at recently. So thank you everyone for watching. I will see you guys next time.